Here's something most people never realize about credit cards. If millions of intelligent, hardworking people keep ending up in debt, at some point you have to ask a different question. What if the problem isn't stupidity? What if the system is functioning exactly as designed? Because modern credit cards don't just make money when you fail. They make the most money when you almost succeed, when you keep working, keep paying, keep carrying just enough debt to survive comfortably uncomfortable. And that's what makes this conversation difficult. Most people are not destroying their finances with luxury. They're using debt to maintain what used to be called a normal life. What's strange is that most people who struggle with credit card debt are not reckless people. They're not buying yachts. They're not flying private. Most of them are just trying to live what looks like a normal middle-class life. And yet somehow, every month feels slightly tighter than the last. You make decent money. You pay your bills. You even try to be responsible. But your credit card balance never really disappears. It just survives. And I think that's where a lot of people misunderstand the problem. Because you're probably not bad with money. Your credit card is simply designed to keep you in debt longer than you realize. Imagine a fairly average situation in the United States. A 28-year-old office worker earns around $4,500 a month after taxes. Nothing extravagant, just a stable salary. Now subtract the basics. Rent, $1,600. Car payment and insurance, maybe another $650. Student loan payment, $300. Utilities, groceries, gas, subscriptions, another $800 to $1,000. Before anything enjoyable even happens, most of the paycheck is already assigned somewhere else. So when something unexpected appears, a dental bill, a flight home, a broken phone, or even just burnout spending after a stressful month, the credit card quietly steps in. And at first it feels harmless. That's exactly why the system works so well, because credit cards rarely introduce themselves as debt. They introduce themselves as flexibility. Buy now. Minimum payment due. Cashback rewards. 0% for 12 months. Psychologically, it doesn't feel like losing money. It feels like postponing pain. And human beings are extremely good at postponing pain, especially when modern life already feels financially exhausting. Now here's where the math becomes uncomfortable. Let's say someone carries a $4,000 balance on a card with a 24% interest rate. The minimum payment might only be around $120 a month. That sounds manageable. But most people never stop to calculate what's actually happening underneath. A large portion of that payment goes toward interest first, not the balance. So even after months of payments, the debt barely moves. And during that same period, life continues happening. Another emergency. Another vacation financed emotionally instead of financially. Another small purchase that doesn't feel dangerous in isolation. This is why intelligent people still end up trapped in revolving debt. Not because they're mathematically incapable, but because the system separates spending from emotional consequence. When you hand over physical cash, your brain registers loss immediately. Digital credit changes that experience entirely. The purchase feels clean, instant, almost emotionally invisible. But the stress arrives later. Usually at night, usually quietly. You start avoiding banking apps. You stop checking balances regularly. You feel temporary relief after payday, followed by anxiety 2 weeks later. And eventually, people begin blaming themselves morally. I must be irresponsible. I need more discipline. But the deeper issue is structural. For decades, wages in many parts of America and Europe have not risen at the same pace as housing, healthcare, education, and transportation. At the same time, lifestyle expectations expanded massively. People are now expected to maintain the appearance of stability at all times. Good phone, reliable car, decent apartment, social life, streaming services, travel occasionally, dress professionally, stay productive. Credit cards quietly fill the gap between stagnant income and modern expectations. That gap is where entire industries make money. And what makes this system particularly effective is that it doesn't collapse people instantly. If it did, everyone would panic. Instead, it drains people slowly. An extra $80 in interest here, a late fee there, a balance transfer fee later. Financial pressure becomes normalized, and over years, the long-term cost becomes enormous. Someone carrying recurring credit card debt through their 20s and 30s may lose tens of thousands of dollars purely to interest payments. Not assets, not investments, not experiences, just interest. Money paid for the privilege of being temporarily unstressed. Now compare that to how financially intelligent people usually behave. Not wealthy influencers online. Actual financially stable people. They often live surprisingly boring financial lives. They understand something simple. A credit card is not extra income. It's future income being pulled backward into the present. And once you truly understand that, spending decisions start feeling different. Not because of fear, because of clarity. Financially intelligent people still use credit cards, but emotionally they treat the balance almost like a timer. Not free money, not lifestyle enhancement, just delayed cash leaving their future account. That mindset changes everything quietly. It changes how often you upgrade things, how much lifestyle inflation you tolerate after a raise, how comfortable you become with saying, "Not right now." And interestingly, the goal stops being looking wealthy. The goal becomes protecting flexibility, because real financial comfort is not owning slightly more things. It's reducing the number of monthly obligations controlling your life. That's why some people earning modest salaries feel calmer than people making twice as much. Less debt, less performance, less invisible financial leakage. And maybe that's the uncomfortable truth underneath all of this. A lot of modern personal finance advice treats debt like a personal failure, but many people are simply reacting normally to a system designed to encourage permanent consumption. Awareness matters more than shame, because once you see how the mechanism works, you stop confusing convenience with affordability. And that realization alone can quietly change the direction of someone's financial future. If you enjoyed this kind of calm, reality-based financial analysis, consider subscribing for more.